Hello there, welcome to David's Investment Analysis channel. Today we're going to be talking about a very interesting stock. In recent investment community, there's a lot of discussion about the possibility of Impossible Foods going public, merging with Forum Merger 2 Corporation, a special purpose acquisition company. And this is why Forum shares have increased as much as 50% since mid-May when they announced that they would be looking to acquire a high-growth plant-based food company. Forum was looking for a company between 500 million and 2 billion. And at that time in my mind, I didn't think it would be Impossible Foods because of the most recent financing when they were valued between 3 billion and 5 billion. When it was announced on June 12 that Ittella International would merge with Forum Merger 2 Corporation to form Tattoo Chef, a lot of the shareholders started selling their shares, perhaps being disappointed that it was not Impossible Foods. The share price dropped to as low as $11.31. Since then, it started to climb and closed at $13.14. In the next bit, I'll talk about the company, how they make income, and what they do. I'll follow up with a qualitative analysis and a quantitative analysis looking at the valuation and the financials. I'll then conclude on whether I think the business is a buy at its current price and whether I own any shares of the business myself. If you'd like to skip the introduction and analysis, I'll left the timestamps below, so you could go directly to the conclusion if you like. And if you haven't yet, please like, share, and subscribe, and click the bell notification. If you have any company you would like me to cover in the future, please leave it in the comments below. Let's get started. So Tattoo Chef is a plant-based food company that offers their packaged food products through their website and in large grocery chains like Walmart, Costco, and Sam's Club. The company plants, grows, and manufactures, handling the product from the fields to the consumer hands. It owns 2 manufacturing facilities, one in California and the other in Italy. And most of the ingredients come from Italy, where they contract the fields, plant their own crops, and they are conscientious of what goes into the food. Now let's look at some of their products. They have several different bowls from fruits to vegetables. The cauliflower series look amazing, and I would love to try them all. They include what looks like nuggets, burger, pizza, and pasta, but they are actually made from cauliflower, so that's pretty cool. The cauliflower mac and cheese won second place for the best new products for the year at Sam's Club. Some of their other products include organic rice cauliflower and zucchini spirals. Now let's dive into qualitatively aspect of their business. Looking at their management team, Sam Galati is the CEO and president of Tattoo Chef with over 35 years of experience in the food industry, having served in both operational and investor roles within several foods companies. Stephanie Diekman, currently both CFO and COO of Tattoo Chef. However, they are currently in search of a CFO, and Stephanie will remain as COO and will oversee organization's ongoing operations and procedures. Prior to Tattoo Chef, she has spent 12 years in the food industry and was the CFO of Appa Fine Foods. Sarah Galati, the Tattoo Chef and the creative director. She was the creator of Tattoo Chef and spearheaded the shift to being a plant-based food company. Prior to Tattoo Chef, Sarah worked as a chef in several places in Italy. Overall, I think the management team is reasonable, and they are the team that brought 77% growth in sales last year, with an expectation of 74% in 2020. So I would continue to trust in this management team until I see any problems. Now let's look at the company's history. The company started out as an importer of Italian vegetables and products in 2009, and then transitioned to manufacture their own private label products in 2015. And then in 2017, they came out with Tattoo Chef brand, focusing on plant-based food products. And the company took off from there, doubling their production facility in 2020. And since launching their Tattoo Chef brand, their sales grew from 32.5 million in 2017 to 84.9 million in 2019. That's a 161% increase. And it's projected to increase to 148 million for fiscal 2020, a 75% increase from 2019. This is incredible growth. Their products are strongly aligned with major food trends. We can see here that more people are moving towards vegetarian diet, pescatarian diet, plant-based diet, and vegan diet. And Tattoo Chef is in 3 out of the 4 most popular lifestyle diets. There has been a lot of growth in the plant-based food industry, sales reaching 5 billion in 2019, growing 13% annually since 2017. But remember, Tattoo Chef was launched in 2017 as well, and their sales were growing at 60% and more. And if they are growing faster than the industry is growing, this means that they are taking market share. Now let's look at some of the articles and what they say about the industry. In this one, according to International Food Information Council Foundation's Food and Safety Survey, from May 2019, 24% of the consumers said they were eating more plant-based protein than they were a year ago, and much of this were coming from the frozen aisle. This one suggests a growing number of mainstream consumers are buying plant-based options. In fact, these products are a key driver of growth at grocery retail nationwide, outpacing overall food growth by more than 5 times. This suggests that the plant-based market will reach $480 billion by 2024, with a projected compound annual growth rate of 13.82% from 2019 to 2024. Moreover, Nestle reported that 87% of Americans are now including plant-based protein in their diets. Michelle Simon, founder and executive director of Plant-Based Foods Association, said that plant-based foods aren't new, but what's happening now is that it's gone from being a niche industry targeting mostly vegetarians and vegans, who are still an important part of the market segment, but now it's grown into mainstream industry that is targeting everyone. And that's what really is causing it to explode, combined with the innovations that's happening. The US frozen food market is approximately $55 billion, and currently Tattoo Chef is in half of the industry, and they are planning to get into desserts in the near term and the possibility of into meats and alternatives in the longer term. The global market is currently around $380 billion. It is very positive to see that Tattoo Chef can grow within the industry and geographically. Tattoo Chef's growing reputation in the food industry has led it to being approached by multiple retailers that request that the company sell its branded and private label products in their stores. And since they are approached by retailers, they can likely negotiate better terms. Tattoo Chef does not currently have a presence in leading regional retailers or in some of the largest grocers in the US, and they are expecting that their branded products will grow 7 to 50% door penetration at the largest national retailer by the end of 2020. Again, here shows that there is a lot of potential for growth for Tattoo Chef as they go into more retailers and grocers. Some of the other factors I would consider include the global health issue and its impact on its supply chain. As most of their food and ingredients are coming from Italy, there is a question whether there's any disruption. The transaction still needs to be approved by forum shareholders, and certain closing conditions still need to be met that is specified in the business combination agreement. Many small startups with a lot of variety in products trying to get into the plant-based food industry. Although not directly competing with Beyond Meat, but it may be challenging for them to get into the meat and alternatives plant-based foods. It is still relatively a small company and is going public in the near term. They may be lacking experience in running a public company. Now let's look at some of the financials. The growth rate is outstanding, growing at 77% in 2019, an estimated 74% in 2020, and 50% in 2021. Looking at their most recent Q1 results, they are outstanding. Q1 sales more than doubled, from 17 million to 34.1 million. If they could continue at this rate, their estimated 2020 sales of 148 million would be considered conservative. Their EBITDA, which is earnings before interest, tax, depreciation, and amortization, grew 264%. Not only Tattoo Chef has been able to grow significantly in its sales, but they were able to do it profitably as well. And this is very, very positive. Next, we'll look at the merger transaction details. The enterprise value excluding cash would be 482 million, which is 15.6 times 2021 adjusted EBITDA or 2.2 times 2021 revenues. If we include the remaining cash of 94 million after paying out existing shareholders and transaction fees, we get a valuation of the company at around 575 million. And with approximately 57.5 million shares outstanding after the merger, the share per price would be valued at $10 per share. The current price of the stock is $13.14, so it is approximately 31% above the valuation of $10. Looking at their growth compared to other comparable companies, they are growing a lot faster in sales and adjusted EBITDA. And their adjusted EBITDA margin of 13.9% for 2021 is expected to increase to high teens close to comparable companies. When we look at valuation, it is projected that Tattoo Chef would be growing faster than Beyond Meat. Beyond Meat is likely currently the only publicly traded company that's 100% in plant-based food, making Tattoo Chef the second one once the merger takes place. The valuation of 2.2 of 2021 sales and 15.6 of 2021 adjusted EBITDA may seem like it matches the other comparable companies, but the other comparable companies are not growing at the rate Tattoo Chef is. If we compare the valuation with Beyond Meat, Tattoo Chef is trading at a cheaper valuation, but also have a projected better growth rate. If we even take half of Beyond Meat's valuation at 6.6 times 2021 sales, we get $27 per share. And to be even more conservative, taking 1/3 of Beyond Meat's valuation at 4.4 times 2021 sales, we get $19 per share. The current multiple for Tattoo Chef on 2021 sales is 3.4 times, and in my opinion, I think they deserve a higher multiple because of their outstanding growth rate. Conclusion. In my opinion, at today's price of $13.14, I think it is a buy because of the following reasons. They are in the fast-growing plant-based food industry and expected to grow around 13% per year. They plant, grow, and manufacture, handling the product from the fields to consumers. This allows them to control the supply chain and what goes into their foods. They have an outstanding growth rate where sales grew 77% in 2019 and is expected to grow 74% this year, 2020. They have the opportunity to grow within the US through the distribution in additional retailers and grocers. They also have the opportunity to grow through additional product offerings and into other areas such as desserts and meat and alternatives. They also have the opportunity to grow internationally through their current partnership retailers and grocers. And they also have a very reasonable valuation and perhaps even undervalued compared to its competitors. But also bear in mind of these concerns and risks. Global health issue may impact supply chains, competition for shelf space with many small startups and large multinationals. The transaction is still subject to approval and closing conditions. Even though they have an opportunity to grow, it might be difficult to expand internationally and add new product offerings. Raw materials such as food and ingredients depend heavily on weather conditions. And there's a risk that perhaps there can be bad weather that would cause the food price to increase. Disclosure, I do own a little bit of Foreign Merger 2 Corporation shares. It's about less than 1% of my portfolio, and I do intend on adding some of this coming week because I think the company is undervalued with undeniable growth. I'll definitely be following this company going forward as they report the results. That's it for now. If you haven't yet, please like, share, and subscribe, and click the bell notification. Thank you for watching. Until then, see you next time.